How are currency exchange rates determined? If you travel internationally, you most likely will need to exchange your own currency for that of the country you are visiting. The amount of money you'll get for a given amount of your country's currency is based on internationally determined exchange rates. Exchange rates can be either fixed or floating. Fixed exchange rates use a standard, such as gold or another precious metal, and each unit of currency corresponds to a fixed quantity of that standard that should, theoretically, exist. For example, in 1968, the U.S. Treasury determined that it would buy and sell 1 ounce of gold at a cost of $35. Other countries would establish their own cost for the equivalent ounce. A floating exchange rate means that each currency isn't necessarily backed by a resource. Current international exchange rates are determined by a managed floating exchange rate. A managed floating exchange rate means that each currency's value is affected by the economic actions of its government or central bank. The managed floating exchange rate hasn't always been used. The gold standard controlled international exchange rates until the 1910s. Another very similar system called the gold exchange standard became prominent in the 1930s. This system allowed countries to back their currency not in gold but with other currencies on the gold standard, such as US dollars and British pounds. The International Monetary Fund, IMF, was responsible for stabilizing the currency exchange rates until the 1970s, when the U.S. ended its use of fixed exchange rates.